Welcome back, everybody, to another episode of Built to Scale. Really excited to have a good friend here, Robin Klinghagen. That Robin is a SALT partner at Andersen, an international tax consultancy firm that I personally know Robin. We've connected in Houston here, home base here. And Robin helps all types of construction clients with SALT issues or SALT concerns. SALT is and we're not talking about, the table condiment here, the cooking condiment that, the seasoning here. We're talking about taxes, but specifically salt and local, or I should say state and local taxes. I was going to say salt and local taxes, but state and local taxes. And this is incredibly relevant for construction businesses, especially growing ones that want to move into multi-state growth, et cetera. But even within their own state, what they're compliant and required for, what they need to be compliant to do, as well as what they can be potentially liable for. So, really grateful to have you on, Robin. That can you share a little bit about with the audience about yourself, a little bit about your background, what brought you to where you are today?
Yeah, so I have been doing state and local tax for over 30 years now. Started my career in industry, worked my way through the big four, had my own firm for a few years, and then joined Andersen about 5 years ago. So I run our commercial practice in the Houston office and also the state and local practice in the Houston office.
For our audience, because this is one of the things that I've even had to grow in is, and I think for our audience to know how to get the right resources to help them in these areas, that try to help us understand what all encompasses salt, because I know that there's experts out there that are sales and use tax experts, but that's a fraction of it, right? Of salt. That what all does salt encompass? What is the big umbrella? What all can it include?
So state and local tax encompasses any jurisdictional type of tax. So income franchise, sales and use, property, gross receipts taxes, um, motor fuels taxes. There are over 12,000 sales and use tax uh, jurisdictions. There are, in addition to your 50 states, there's about 5,000 state that have local income taxes in about 17 states where the local jurisdictions are doing it. And in total, there's over 90,000 jurisdictions, whether it be your state, your county, your city, your school district, your county, whatever, that have the authority to impose some type of a tax. So it's very broad.
Yeah, it's incredibly nuanced state by state, right? Um, yeah, I just, even at a personal level, I was mentioning to you that, we moved from California to Texas about 4 years ago, and go from one property tax bill, one solo bill, for the state of California to we have three different entities we have to pay property taxes to, all with the unique billing. That I remember our first year here when we bought our home, that my wife and I looked and we're like, didn't we already pay a property tax? And yeah, it seemed kind of low for what we understood of Texas, but we're like, yeah, cool, we'll take it. That we're gonna take that one. That seems great. And then
No one will
it
pay.
happens that there's two other bills coming and they were the two highest ones. And so all that said, it just there's nuances of not just what taxes are responsible, but what entities have to be paid. Could it be split and divided out, et cetera, et cetera, et cetera. There's just nuances to this, right? And, so um, what's really at risk for construction business owners? Because I really want to, hone it in for them, that we've talked about the umbrella of what all it can encompass. I mean, it can encompass local property taxes, getting your business registered in a right, jurisdiction if you have a new, office in a place, et cetera, et cetera. Like, it can encompass state and use tax, gross receipts tax, all of these things. Um, what's the real risk for business owners not ensuring compliance? That what's at risk here?
With construction businesses, there can be a lot because you've got contracts involved and how those contracts are worded. Whether it's lump sum contract or time and material contract, all of those nuances go into different tax treatments for sales and use tax purposes. So you really need to understand your contracts. I had one contractor. And usually it's the contract that leads, and if there's not a contract, then it could be your purchase order, but there's an ordering structure for what takes precedence. And so you may invoice one way thinking that you did it, with this, but if your contract was worded another way, you could end up with a totally different answer. So you've got to make sure all of your documents are saying the same thing. Um, Another big issue that I see with construction workers is, they go into different states and they're like, "Well, we don't have a place there. We just went there and just performed a quick service, so I don't have any connection to that state." Well, you actually do. You exposed yourself to income franchise taxes in that state. You exposed yourself to employment type taxes in that state. Even if you were there for just a week, that's enough to possibly create nexus. Now, you look at, you want to look at, going into a state and kind of weighing your, practical versus technical, but you want to understand the technical side of what's going on when you're doing it. Um, you have usually with construction, you'll have mobile assets, and for property tax purposes, that can become a huge nightmare. Where were my assets on 1/1? And do I start filing in all of those states for or all of those counties for property tax purposes? So
Yep.
construction workers have a lot. There's just a ton of state and local tax issues that they can be surprised by.
Like large general contractors are not working off of amazing margins here where all of a sudden, they're making 20, 30% on, these large scale jobs that some of them are competing for, 8 to 10%, gross profit margins. And you and I were talking earlier that, some sales tax, liabilities could be as high as 8%, on goods. And so just so much of your margin could, and granted, that includes, like where that's levied and exactly how that's levied on your cost basis, et cetera, is unique. So it's not like all of your margin gets, if you had an 8%, gross profit job, that it's not like all of a sudden just because there's sales tax of 8% that all of your margins wiped out, depending upon how it's levied. But um, you could have a very significant portion of your margin completely gone. And there's a lot of general contractors out there that are, lucky to make 2 to 3% net income margin. You're just operating on such slim margins. You don't need, some issue to pop up. And especially, I think what, we talked about it, again earlier that, um, what's at risk is that if you have a job that you've been working on for years, that if you haven't been collecting and paying the appropriate tax, that towards the end of a project, all of a sudden you could be liable for the full lump sum. And from a cash flow perspective, et cetera, you may not be ready for that. That if you took the hit in that year, that every other year that didn't ever record the expense or the liability associated with it, and all of a sudden you get hit in the current year, it could be a really big deal. It could really impact cash flow significantly. And so, yeah, I guess I'm emphasizing for our audience that not ensuring compliance with these things, especially our audience may be considering for the first time to go multi-state, right? That they could be looking at projects outside of their local regional area that, they have the team that can grow and that they're interested in doing work, or maybe they have clients that are asking them to enter into different regions. But if you don't get this right, that especially at the estimating and bid level correct, I mean, that's the key here, is that you have to build this into your margins from the very beginning. Like, you have to have enough understanding before you step in a job. If you've already stepped into the job and then you're seeking understanding, you can be way too late. And, these are not things that you may be able to get change orders on. And you likely won't, that you should have known this, and that when they accepted your bid, they would have assumed that you would have known this, so there's so much at risk that to get this right and to get it right at the bid and estimate point in time, right?
Exactly, and that's one of the key things I do work with my, construction type companies with is on pricing. Here's how you're gonna have to do it. If your contract is gonna read like this, you have to do this, and the thing about it is, I've tried to do taxability matrices for various construction companies, and it's hard because, you know, there's just so many levels of taxation within construction that I can say, "Hey, this is taxable if this, and this are true, but if this changes, then this could be not taxable." And so here's kind of the answers, but I need to see your contract and really read through that to see what the true outcome of it is going to be when a state looks at it. Because when a state comes in and audits, that's what they're gonna ask for. "Let me see your contract. How is that worded?" and then that's how we'll apply the tax. So I read a lot of contracts, and see how the wording is done in them, and, give advice like, "Hey, if you're able to do it this way, then you can pass the tax through. If you're not, then you're gonna wanna make sure your bid's a little higher."
Walk us through, like, because I'd love to hear some tangible examples from you of, um, like what, and there's probably bias here, right? That it's like, yeah, if we all have our home state, it's like, well, this is what we know and this is normal, and then everything else is abnormal, right? But, um, like you and I have worked on a client that entered New Mexico, and I had never dealt with, and the client had never dealt with gross receipts tax. I just honestly, I had never heard of the concept before. Before stepping in New Mexico, that was very familiar with sales tax and all that stuff and use tax. I'd never heard of a gross receipts tax. And so at least applied at a corporate level. And so I was unfamiliar with it. Uh, Give us some examples of some of the wildest, things for you. And again, I realize that this is bias, that we're both in Texas and we're probably looking out and saying, everything else is abnormal, that like, we have our own way of doing things. But like, what would you say are some of probably abnormal, I'm trying to find the right language, but the most uncommon things that you've stepped into with construction clients where it was like, whoa, this is something that really has to be considered here. Like, what are some examples of that?
I think kind of it really falls into the contracts. It's I mean, and how the states do it, because you have some states that are not quite as in depth in how their contracts. So I'm going to pick on Texas a little bit because it is a very complicated state for construction. Um, it, you, you do have, like New Mexico is a state that taxes everything. I mean, it's gross receipts, so it's just like taxing pretty much everything. There's not a whole lot of exemptions. Texas, you walk into and you have to look at, are you doing a new construction versus repair and maintenance? Are you doing it lump sum versus time and material? Your subcontractors have their you don't necessarily follow a general contractor's rules. They have their own. So you could have a general contractor that has lump sum and a subcontractor that has time and material, and that can get real ugly in a big hurry. So just understanding the how each state really digs into the taxation of it. Usually contractors are considered the end user of their materials, and that's pretty common amongst most states. So if they're purchasing, products for their services, they're considered the end user and have to pay the tax on it. Hence, you want to make sure your bids are covering what your costs are going to be. Um, but then there can be different components that are time and material. I think that's where that's really where I find the most issues, when it comes to, contractors is digging into the contracts and how they're worded, and like I said, if you're gonna be the general contractor, having some say in how your subcontractors do things, in case it's a state that allows them to have their own rules.
So I think the highlight, I mean, we have other things to go through here, but probably the highlight of everybody to take away from this episode is just the nuances of your contracts, right? I mean, from a liability standpoint, from a legal liability standpoint, not just a tax liability, that, uh, you have to understand your contracts to know how you can even insure yourself appropriately for all these risks. Um, you have to understand your contracts from a financial cash flow perspective, but then you have to understand your contracts from a potential tax liability concern and what is stated in the contract itself. That I think the key takeaway that I'm pulling out of this is how much emphasis as a contractor you have to put on quality contract management, and that somebody internally has to know enough to pull the right resources in. It's not that somebody internally has to be the expert, but needs to know, when I'm looking at this really big job, that there is a lot financially at stake for my business. I have to pull in the right resources to take a look at what is in the wording of this contract to make sure that we're aligned with the client, and that what we are responsible for, and that we're good to go. And there's just, it's so clear that don't just submit a bid and sign off on something nilly-willy, like, make sure that you really understand it well before you're committing to it. So, I think for our audience, if I could say that that's the takeaway of what Rob and I are talking about, if that's the one key takeaway everybody wants to walk away with, that is the key of it, is that, don't just, think about pulling in your lawyer into your contracts, that, pull in your salt resource. And, especially if it's a multi-state project and all that. But even like you said, there's nuances in Texas alone if you're a Texas operator. And so, um, I think to this point though, we just mentioned, hey, you need to have a good salt resource. Robin, you are a salt expert at Andersen. um, I know a lot of, new operators. I shouldn't say even new, but just, kind of lower mid-market operators that maybe they've been operating in the same state, and they have their local CPA, that might have a couple partners, or it might be a one-man shop, couple people in it. It's great that they've been handling their income tax returns. And hey, we're recording this on April 17th. So God bless all the CPAs that just got through April 15th out there. But they lean into their local CPA that is an income tax expert, maybe provides them with the CPA review work that they need for their banking and their bonding. Why might it be a risk, or why might it be a concern for that business owner to expect and to lean into that local smaller shop for their salt expertise and resources as well? Why might that be a concern?
Yeah, really it's the, state and local tax is a specialty tax service. I mean, it's something, like I said, I've been doing for 30 years, and there's still things that I run across, that are new. Plus, you've got 50 states that, their tax laws change. Legislation comes in, and you've got, just the nexus issues that states are trying to broaden kind of what nexus actually means to them. And generally, a local shop, if they don't have somebody who specializes in state and local tax, will have a broad understanding of what it is, but can't get into all of those details like I was mentioning earlier. They just don't have that level of understanding in all those components. Um, I had a client that had a rail yard in Louisiana, and they were doing certain construction, and the auditor in Louisiana, there was a local CPA shop handling the audit. The auditor was calling it a parking lot, because of somehow some definition kind of worked in Louisiana. Assessment was in the millions, and they realized, hey, we need to get this over. They got it to us, and we ended up, working through things with them, and getting a good answer for them. But it just goes to, like, a lot of the level it got to could have probably been prevented had we been brought in a little earlier.
I think it's to that point that you've highlighted the thousands of jurisdictions that you have, and even you as a 30-year expert in this aren't going to understand everything that applies to every jurisdiction. You're still going to have to look things up, but it's the idea that you know what questions to ask. And I think that for our audience, I just, because we hear it, right, that hey, shouldn't my CPA be doing this? People are just, I think, especially newer business operators are, they're seeking to understand that, what should I be leaning into this person for, this person for? They're trying to understand, but it's to that point, I think, for everybody to be aware that, you know, uh, your CPA, your income tax CPA has to understand a, federal tax law that's likely going to change every 4 years under a new administration. They're going to have to understand the current state tax law and income tax law, as well as any state that you're also in. And then on top of that, they have to be an auditor to do, any review or third party assurance of your books, and to expect them to also be a SALT expert with all those levels of jurisdictions, and to know what questions to ask in some of these major jurisdictions. It's a tough ask. Yeah. Right. And so I think that's the key of it, is that for our audience, that, and realizing that, margins are tight. And so you can still stick with, your local CPA, for both your review, for your income tax, but having a partner like Robin, and maybe I'm selling Robin here to our audience, but, just having a partner like Robin that is an expert. And I think for me, I kind of learned from, experience in this, that the rule of thumb is that unless they have a dedicated expert like you, that even though that they may say that they can help, what they'll likely be doing is researching it just as much as the client may be researching it. And they can have a step ahead because of their tax law knowledge, but they're just not going to get the expertise that's needed to get the answer done right, quickly, and efficiently that, having somebody dedicated like you, Robin, would do. And so I just want to advocate to our audience that when you're really considering expanding into multiple different states, et cetera, that having somebody on your bench that is a resource, that it may not be in your local CPA shop, but somebody like Robin is just, it's really, really important, I feel. Learn that from experience. And so, one thing is to all this, Robin, that you're going to come in, provide a lot of consultancy advice, guidance in regards to what needs to be considered. But at the end of the day, somebody inside the business is going to have to manage actually collecting, the sales tax, for example, or collecting it, or, remitting payment to the appropriate agency or entity, some of the nuanced admin stuff. And, what were your recommendations for how a business should be setting up their resources, whether it be technology, software, people? What would your best recommendations be in regards for a business to be successful internally to be ready for all this?
Certainly that there should be somebody internally that takes ownership of the, tax and then state and local tax within the organization. Somebody who can, be aware of, hey, we're going into a new state. I know that that means something. We need to take this next step. Doesn't mean that they have to have all of the expertise into the details of it, but know when you need to call somebody in to do it. So internal ownership is key to doing it. And then, just being aware of your growth as as you expand into more states, if you find yourself leaning on a consultant a lot, maybe it's time to bring somebody in-house that can help with, some of the more day-to-day items of it, and then go back to having your consultant be somebody who is your support system. We at Anderson, we do, full on compliance and handle, everything. We can do it from consultant to the nuts and bolts. So it's not something that we can't do, but you have to also kind of understand where your economics are. I look at my clients as business partners. I mean, I am not going to understand their business as well as they're going to understand their business, and they're not going to understand the tax law as well as I'm going to understand the tax law. So it's a partnership. It has to work together. And if you don't have that, um, you know, team in looking at it, it's not successful on either side.
Yeah, I think for our audience, you highlighted something, but because so many of our audience members, when they, or so many of our clients, when we first start with them, sorry, excuse me, um, they're operating on QuickBooks Online, and part of the transition or part of the next step of growth is realizing they've outgrown that. That they can't get the WIP reporting that they're looking for. Some of the reporting doesn't allow them to be efficiently compliant because they can't get the information out to report it to the appropriate entities nor collect on things. And so that's a big consideration is, yeah, you have to have the team member that can lean into support like you, but there has to be the technology and the systems to collect things that regularly, that you can track and collect things that it's a bad idea, in my personal opinion, to just keep a bunch of things in Excel. That it's just scary that you could have formulaic errors, and somebody's maintaining that Excel, and when that person's gone, then okay, nobody's maintaining that anymore. So it's just so important that as a part of the next steps for business evolution, that when you are considering that multi-state growth, it probably is beginning, like, that itself is probably a trigger that you might need a better ERP system, that may trigger that, okay, we need to be considering some technology upgrades that actually help us do this and track this efficiently. So, yeah, great insight there, Robin, that as we kind of wrap up today's show, or today's episode, you've provided such good insight here, especially for construction business owners. And, that emphasis point in the middle of our show, that so much is related to the contract itself, and making sure that there's appropriate contract design before committing to a job is so critical. And pulling in your SALT resource into a contract is critical for especially those that are already doing multi-state, or, are considering doing it for the first time. And even if they're in a nuanced state like Texas, that they're trying to navigate different, potential service opportunities. But, pulling you in is such a critical part, and a step in this. What would you say is kind of a final takeaway you want our audience to know about SALT and about issues or concerns related to SALT, that maybe something that we haven't covered yet, but what would you want the big takeaway to be for our audience?
So I'm going to end hopefully on a happier note. There's opportunities out there also. There's different credits and incentives. I mean, there's some great property tax incentives. That for heavy construction equipment in certain locations and jurisdictions that we can look at for you. Um, there, depending on the type of, construction that you're doing, there could be other, sale tax type exemptions. So, it's not always. I mean, yes, we wanna make sure that you're compliant in your contracts and you're collecting everything the way you're supposed to be so that those audits aren't as painful, but, we also wanna be looking for opportunities. How can we, help you find money saving opportunities as well, and there are some out there.
And I think it's wonderful that you ended on that note that, yeah, maybe I was being a bit negative throughout the, the episode of, "Oh, all these liabilities that are due and all these risks and everything," but to your point that
It's a scary area for sale, especially for sales tax. It can get scary, but there's some opportunities too.
it's just so complex, right? And that it's, like, I think in the media and the news that you hear of things with every administration change on a federal level of these big changes, and then you get all these resources that help explain them. But as you keep going down granular, more detailed levels into salt, it just doesn't feel like the resources are as easy and as palpable to understand. And so, yeah, and there's not as many. And so then you have to lean into partners like yourself. But to that point that much like, your income tax CPA, you want not just calculating the tax and what you owe and do, that you want them to help you advise on opportunities. And so that's kind of the point of having somebody of your level of expertise, is that what are the opportunities that exist? I'm glad you ended on that note, that it's not just that what you're liable for, that there are opportunities that you can take advantage of too. By, states want to incentive particular economic activity and want to bring you in and have things done. And so, having somebody like you with your expertise to know what are the opportunities for some of these businesses, that it's great. And so, glad you ended us on that note, Robin, that was probably the best thing that we could have ended on, that there are opportunities, right? That the scary world, but there are opportunities. So just so appreciate you having, you coming in with your level of expertise. For our audience that, how can they find you? Where can they learn more information about you?
Well, you can find. I can leave you my email address, and contact information for you to put as part of the podcast. But otherwise, also on Andersen. Um, I think it's
Perfect.
Andersen.com.
Yeah. Andersen.com, and look up for Robin Klinghagen, y'all. Yeah, but thank you, Robin. So appreciate having you on the show today.
Thank you, Mason. I appreciate it.
Yeah. See you, everybody. That we'll catch you next time.
Hi, everyone. So, if you enjoyed today's episode and you found value, or it raised some questions for you about the next best steps for managing your finances in your construction business, please reach out to us at bradycfo.com. There's a contact page there where you can fill out, and that will come straight over to us. Either that, or you can personally find me on LinkedIn. My name is Mason Brady, and feel free to send me a message, and happy to chat and talk through anything you're facing today, and happy to provide some advice. So thank you all. Appreciate it.